Good afternoon, everybody. This is Hunter Mozingo bringing you your daily market insight video here on Tuesday, January 18th, about 30 minutes after market close in Jacksonville, Florida, 4:27 p.m. Eastern time to be exact. And today we had a really ugly day on Wall Street, and we're going to break down a lot of that action. There's not a lot of positives, but we are going to highlight the positives. And we're also going to talk about rotation versus liquidation, and why today felt a little bit more like liquidation than the rotation days we've seen over the last 3, 6, 9, 12 months, really. So we're going to break that down a little bit too. We're going to talk about that. Additionally, we've got some changes to the trend gauge. We've got a change to the market state. So let's get right into it. What just happened? Yields move higher. We actually saw them break out and continue higher above 1.8. That was a big deal, and I'm talking about the 10-year. Equities gap down over the course of last night into this morning. That followed through. Pretty much weakness persisted as the day went on, not much of a bounce, and growth crushed again, evidenced by the G6 here down 3.2%, S&P down 1.8, Qs down 2.5, Dow down 1.5, mid-caps down about 2, and Russell 2000 down around 3. So just nasty action across the board, nowhere to hide. Oils were actually one of the better acting areas of the market, and the small caps still down 3%. So like I said, nowhere to hide today. Even some of the big leaders starting to crumble a little bit. We're going to look at those charts here in just a moment as well. But I mentioned a change to market state. That has been moved to correction as of today, 118. Prior to this change, it had been changed to consolidation on January 6th. So now on January 18th, it is being changed to correction with the weakness, the gap down that we saw this morning. The Dow finally started to succumb to some of the weakness. So market state now in correction. Additionally, the medium part of the trend gauge has now gone from neutral to bearish. As you can see here, neutral to down on 118. That is because, like I said, Dow now finally succumbing to the weakness below the 50-day, S&P definitively below the 50-day, gapping down back a pretty decent ways away from it. Small caps and mid caps also not looking the greatest. So the Dow finally participating in the weakness. We pushed this over to down, and we got a small red arrow here in place of where there was a small yellow arrow, and that's because we've got mid caps closing below the 200, got the NASDAQ composite below the 200-day, and we've also got the other major indices quickly approaching their 200-day. So let's get to the charts, but first let's talk about Revere for a quick second. This is me. If you have any questions or comments on the video, send me an email, please, hunter@revereasset.com. I will happily respond. If you're interested in what we do at Revere, what our strategy is, what our approach or our services are, send Dan, Tim, myself, Meryl, Alex, or Don at revereasset.com. We'd all be happy to talk to you. So let's get into it. We're going to start with the S&P here. So as I mentioned, we were not too far off of the 50-21 here where we closed on Friday. However, now we are. And we're also seeing the 21 and the 8-day cross through the 50 to the downside on the S&P, which is not a great sign. You don't want to see that. And up until today, really, it had avoided it while we saw it last week on the Qs. But it looks like the S&P now participating with the downwards cross of the 21 and the 8 through the 50. So as you can see on the SPY here, we took out this 110 low. We quickly took out this low from Friday. So like I said, just not much positive. Really wasn't a ton of support, it felt like, in the market. Just kind of drifting lower as the day went on, undercutting these 110 lows. That was very important on SPY, and that is what happened. So let's move to the Qs quickly here. Interestingly enough, they did not undercut their 110 lows, but it is important to note they had a much quicker and steeper pullback here than the S&P or the Dow or anything like that for that matter. But it did come within about 50 cents of it, so important to still monitor. But the Qs, just more of the same, rejected at an overhead moving average harshly, as you can see here. Tried to show some type of strength or resiliency on Friday, only to come in today and gap down. So market's just a tough place to be in right now. You see that, I mean, in this area here, I mean, there's a lot of really sharp moves down, sharp moves up, and that is characteristic of unhealthy markets. So first level to watch on QQQ is 369.31. That's the low from 110. That's what I'm watching next. And then you've got the 200-day right there, just a little bit below it on the Qs. Let's go to the Dow real quick. I mentioned finally getting below the 50-day, reclaimed it here on Friday, but gap down today below this 360 level, which has been important. Hadn't been able to stay above it for very long. And so now kind of in this no man's land below the 50, between the 200. Not the greatest spot for DIA here. As you can see, selling off with volume too. Not that that's abnormal. When things start to sell off, you see the indices have elevated volume, but down with pretty significant volume today on DIA. IWM, the ugliest of the bunch, I would say, breaking these 210, 211-ish lows from last week, and then breaking this low here from a while back, 208.76. So just all around not good on IWM. You wanted to see this low hold or these lows hold, and you didn't get either one today, and closed at the very bottom of the range. Lastly, MDY closing below the 200-day for the first time in a while, in about a month or so. So MDY below the 200, just not encouraging action here either. Twice rejected at this overhead 50, as you can see there, only to ultimately continue lower. So indices, none of them really looking spectacular right now, but that's the nature of the beast. That's the situation we're in. So let's quickly look at TLT, and conversely, we're going to look at TNX. So this is TLT. This shows you that essentially yields were going up, right? When TLT goes down, yields go up. So TNX is the 10-year yield here, and you'll see this strong move up, right, above that 1.8 level. So yields moving higher with some pretty decent significance. However, banks were down today, right? We'd seen banks benefit from this move in yields, but today banks did not benefit. And that's another component of what we're going to talk about in a little bit, about liquidation as opposed to rotation. So let's highlight some of the winners from today, or some of the ones that showed some relative strength. Not much out there. The XLE ETF, this is your Chevrons and your Exxons, actually finished green. The oil and gas exploration ETF, XOP, did not. The oil and gas services ETF, OIH, also did not. So XLE, the only one of the group staying green. But this was one of the stronger parts of the market, which showing you two ETFs that are down 1.5% and one that was up 0.4%, kind of tells you everything you need to know about today. The Chem Ag group, which I've talked about a good bit, also some significant relative strength today. This is Nutrien, CF Industries, also strong today, and then Mosaic, MOS, also looks good. Caterpillar and John Deere continue to hold up very well after this strong move with volume. You can see the RS line essentially going vertical here on Caterpillar, and the same with John Deere. Okay, and then a couple more here. NEWR, New Relic, one of the better looking software companies out there, and it was green today on the day where the markets were really bad. So that's pretty much the only reason I'm bringing this to you. But I do want to highlight it is one of the better looking ones out there. Many look far worse than this. So NEWR, slightly green today, showing some out of character relative strength on the day where the markets were down pretty big. SLV, the Silver Trust, also up about 2.5% today. And then lastly, more so a little bit of news to bring you guys. Activision was up big today on news that Microsoft is going to be acquiring them, I believe, for $95 a share. So Activision, a pretty big merger. This is a big company, a $65 billion company. So Microsoft continues to sink its teeth into the gaming world and gain a little bit more control there. So let's quickly talk about what I mean by rotation versus liquidation before we get into some of the negative stuff from today as far as the poor performers, because I think it's a good segue into that. So let's look at consumer staples here, XLP, which has been really the best safe haven, I would say, for your dollars over the last month or so, while fear has ran rampant, as you can see, basically from the beginning of December to now. We've seen Procter & Gamble do really well on days where growth does bad or where the market does bad. We've seen money flowing into defensives like staples, like utilities, and like healthcare. However, you can see XLP was down 1.5% today. XLU also down, I believe, about 1.5%, 1.2. And then XLV is the healthcare ETF, down about 1.5, 1.4. So as opposed to a good bit over the last month where we've seen these defensive ETFs hold up really well while growth is getting crushed or while the markets are pulling back a bit. Not so much the case today. And similarly, we've seen the financials ETF do really well when rates are doing well, right? See, from 1220, we've seen the XLF ETF go all the way up to 42, right? For some 37 to 42 for this ETF from 1220. Well, when did rates start to break out? Let's look at that as well. See rates moving higher from pretty much around 1220, okay? However, that correlation seems to have changed the last day or two. Good gracious, I'm sorry guys, let me get that on the screen for you. XLF, there we go. So yields up big today, just like they were during this whole run for XLF. Yields were moving higher, so is XLF. However, now it's getting sold. So the correlation has fallen apart to some degree, and maybe that's just, again, further evidence of liquidation as opposed to rotation, dollars coming out of the market as opposed to being shuffled around within the market. So some of those defensive areas, the areas that were holding up, the areas that you would think would do good on a day like today, also having just as poor of a day as a lot of the other areas. So let's get into the bad. Let's talk about some of these leaders that were holding up and starting to maybe crumble a little bit here. So Micron, although it is still above the 21, it was down 5% today, which is somewhat out of character for Micron itself, just on a volatility basis. Micron down 5% and Qualcomm also down 5%. These were two of the better looking, cheaper, not crazy valuation semiconductor stocks that were hanging in there, and we're seeing a little bit of weakness bleed over to these names too. Facebook down another 3% or so today. Nvidia down another 4% today. So I mean, these are big leaders, big stocks that really impact the indices, as you can see. Biotech's just one of the worst sectors today, down 6%. I mean, down 20 something percent, 22% or so on the year, basically here for XBI. Just awful action down. And this is what's really interesting here on XBI. You would think this 100 level on a weekly basis, it was resistance a ton of times here. 100 level essentially just sliced through like butter, which I think is just further evidence of the market we're in. We're seeing support levels just absolutely demolished on a lot of names. So XBI and SOX, two of the worst performing sectors today. So biotechs continue to get crushed. Semiconductors had been one that was holding up the best, kind of helping the market hold up, maybe starting to succumb to a little bit of weakness here too. SI, the crypto bank, down 25% today after earnings. The market did not like it. And crypto stocks were also weak, like miners, like MARA, down pretty big today, another 9%. Crypto itself, GBTC, I believe also down about 7 or 8%, yet 7% here. So crypto having a tough day. Some of the former growth leaders continue to have a tough day. Affirm down a little over 7%. SoFi, once a leader, down about 9%. Let's see, who else in here? Applied Materials, Semi Equipment. This is a huge company. Just getting just crazy action here on Semi Equipment stocks, or on AMAT in particular. A failed breakout here, a $10 range, and then this massive day on Friday, up 7% or so on volume, only to come in and be down 9% today. I think this just speaks to the choppiness and the volatility in the market. Last one here, one of those other leaders that was hanging in there that's starting to fall apart a little bit, FFIV, a down 5.5% day, also uncharacteristic for this name. Just awful action. FFIV, Micron, and Qualcomm, three of those names that were hanging in there and actually looked okay coming into today, that starting to show some signs of weakness. So that is going to wrap up today's video, everybody. I hope it was valuable. Hope you liked it. If you have any questions, send me an email. I will happily respond. But I will see you on Thursday's video as well as the podcast. Hope you all have a great week.